Very good morning to you. Today we will complete the previous topic we did study in the previous lecture called non-profit organization, accounting for non-profit organization. Here we will cover one instance, one example of non-profit organizations, that is club or clubs, non-profit organizations or club accounts. So we will cover club accounts, that is an example of a non-profit organization. Club accounts include two types of accounts: receipts and payment accounts and income and expenditure accounts. So non-profit organization, specifically club, prepare two kinds of accounts: receipts and payment account and income and expenditure account. Club, associations, and other non-profit making organizations don't have trading accounts and profit and loss, trading accounts and profit and loss accounts. Trading accounts and profit and loss accounts, these both accounts are called income statement for profit organizations. Income statements. Income statement include trading account and profit and loss account. So clubs, associations, and other non-profit making organizations don't have trading and profit and loss accounts drawn up for them, as their main purpose is not trading or profit making. Their main purpose, non-profit organization, their main purpose is not trading or making profit. These clubs are run so that their members can do things such as play football or chess. The kind of final accounts prepared by this organization are either receipts and payments account or income and expenditure account. So non-profit organizations, specifically clubs, prepared two accounts: receipt and payment accounts and income and expenditure accounts. Firstly, receipts and payments accounts. The receipts and payments account of a firm is a summary of the cash book for the period. Receipts and payments. The receipts and payments account for the year ended 31st December 2008. The left side refers to receipts and the right side refers to payments. Receipts, bank balance at the beginning of the period, 1st of January 2008, subscriptions received for 2008, rent received 2,360, 11,480, 1,160. Payments, groundsman wages 7,270, sports stadium expenses 2,960, committee expenses 580, printing and stationery 330. So we have to get the sum for each side. 15,000 I think you know how to make the balancing for T account. $15,000 less 7,270, 2,960, 580, 330. So the remaining is 3,850 bank balance at the end at 31st of December 2008. And we will be the beginning balance for the new period, for the new accounting period. 1st of January 2009. Income and expenditure accounts. Receipt and payments account only shows the amount of money entering and leaving an organization. Money entering, receipts, and leaving, payments, and organization. However, very often what is required is an account showing whether the income received by the club or association is more or less than what it has spent. As a result of non-profit organization not being motivated by profit, an income and expenditure account is drawn up. In reality, it's very similar to a trading and profit and loss account used by a profit-oriented firm. So, income and expenditure account, that is prepared in non-profit organizations is very similar to the trading and profit and loss account for profit-oriented firms. Profit-making firm, non-profit organization. Here, under the profit-making firm, trading and profit and loss account, income statement, income and expenditure account. Net profit, surplus of income over expenditure. Net loss, excess of expenditure over income. Cash book, receipts and payments account. Here is the difference between profit-making firm and non-profit organization related to the main accounts and the results of these accounts used in each type. Firstly, profit-making firm, trading and profit and loss account. Income statement, income and expenditure account. Not net profit, surplus of income over expenditure. Net loss, excess of expenditure over income. Cash book, receipts and payments account. Accumulated fund is sole trader, entrepreneurship. Sole trader, or a partnership would have capital accounts. A non-profit making organization would instead have an accumulated fund. So capital accounts are used in sole trader or a partnership. On the other hand, accumulated fund is used in non-profit organization. It's in effect the same as the capital account. The accounting equation under the profit-making firm and accounting equation under non-profit organization. Under profit-making firm, assets equal capital adding liability. Non-profit organization, assets equal accumulated fund adding liability. Profit or loss for a special purpose. Profit or loss for a special purpose. You must concentrate on a special purpose, profit or loss, not for the club as a whole. Not for the club as a whole. On the other hand, it's profit or loss for a special purpose. Sometimes there are reasons why a non-profit making organization would want a trading and profit and loss account. This is where something is done to make a profit. However, the profit is not kept, but is used to pay for the main purpose of the organization. For example, a trading account may be drawn up for a club bar that is aiming to make a profit that can be transferred to the income and expenditure account as an income. Drawn up an income and expenditure account. Short Road Football Club trial balance at 31st of December 2009. Debit credit. Sports equipment balance sheet. Debit, the normal balance. For sports equipment, normal balance is debit. Normal balance for club premises, debit. Subscription revenue, normal balance, credit. Sales of party tickets, revenue, 6,000 credit. Wages, expenses, debit. And we need here to distinguish, to differentiate between balance sheet, income and expenditure statement for the club as a whole, bar income statement for the special purpose, bar income statement for the special purpose. So the total of the debit side, the debit column, 640,731. 640,731. The following information is also available. Bar stocks at 31st of December 2009, 23,620, provided for depreciation, sports equipment and furniture and fittings. Short Road Football Club bar income statement. This statement for a special purpose. Short Road Football Club bar income statement for a special purpose, for trading work. Sales, less cost of sales opening stock, part purchases, adding part purchases, less closing stock, cost of sales 104,341. So here trading account and income and income statement. This part refers to trading account. How to calculate cost of sales? Firstly, opening stock, adding bar purchases, less closing stock. So cost of sales equal 104,341. So 168,250 less 104,341, 63,909. Less expenses. Wages of bar staff related to bar staff, only bar staff, 47,500. So profit from bar 16,409. This income statement for a special purpose. Income and expenditure account for the year ended 31st December 2009. This income and expenditure accounting for the club as a whole. For the club as a whole, income and expenditure account. Income, profit from bar, 16,409, as you see here. Subscriptions, donations, profit from party, 6,000 less 2,000 expenses, 6,000 revenue, 2,000 expenses, 4,000 profit from party. And expenses, less expenditure, rate and insurance, telephone, postage, general expense, depreciation. So 59,330 income, less expenses 57,780. So there is surplus of income. There is surplus of income because income is over than expenditures. 1,550 surplus of income over expenditure. Balance sheet for the club as a whole. Fixed assets, club historic cost, depreciation, net book value, club premises 296,000, no depreciation, 296,000 net book value. Furniture and fittings 52,600, less depreciation 13,150. The difference between these two figures 39,450. And current assets, bar stock, cash of bank, current liabilities, discounted. Creditors for bar supplies, discounted from current assets. The difference between current assets and current liabilities equal working capital. So the total assets 418,710, and liabilities accumulated fund 417,160. Balance at 1st of January 2009. Add surplus of income. Add surplus of income. Surplus of income. So the total 418,710. There is an equality between assets and liabilities. Thank you.